Jerome Powell sounds hawkish for the fall. We've got 3 plays and 3 sectors you'll want to look out anyway. Welcome back, everybody. Don Miller from MarketBeat here with Thomas Hughes. We're going to give a brief look into what's going to go on next week, what happened this past week, and see where we can make some money in the stock market. Thomas, how you doing today?
I'm doing good, Don. How are you today?
I'm always good. Hey, Thomas, the Jerome Powell, Fed chief, talked from Jackson Hole, which he does, I guess, once a year or so, on Friday. I'm going to say from my observation and the observation from others that are watching, he was mostly hawkish with his comments, talking about rate hikes and the forecast for more rate hikes if needed, which you and I both think there will be needed. I don't know why he skirts around it the way he does with his wordsmithing, but he does. The market seemed to brush it off, at least as we're recording this afternoon. The market's green. Some of that may have to do with the market being so red for the past few days or weeks even. But what's your take on what he said?
Well, Don, my lead into the newsletter this week is the hawks are flying. My take on the statement is that it was very hawkish. You say he skirts around things, but what I see him doing is warning the market and saying we're going to do these things, and then kind of equivocating, and saying, but maybe not, and the market wants to let under that maybe not. But I think the real takeaway from this statement is that there are risks to inflation. He doesn't really say it explicitly, but I believe that they see oil as a risk. Oil prices are rising. His comments about energy being misleading, I think, was a message to the market that the market allowed the decline of oil prices to mislead it into believing that inflation was tamed, but it's not tamed. Mm-hmm. Inflation is probably going to sustain at the level that it is because oil is elevated from its lows. But when oil breaks out to new highs and starts trending higher the way that it should because of the supply-demand imbalance, inflation is going to reaccelerate. And I think that he will absolutely hike rates again, and maybe 2 or 3 more times.
I'm going to say something here because I seldom agree with the Fed, their policy, or Mr. Powell in general. But what he said there about energy is actually confirms what we've been saying on this channel for most of the summer. With oil prices being down, it led people to believe that inflation was indeed under control. But the risk of oil and energy, I'll include energy because he didn't actually say oil, he said energy.
Energy,
prices, but yeah, well, we know what that is.
It all comes from oil. I mean, it comes from
everything's oil. So there's risk involved in going back to a little bit higher inflation, maybe a lot higher inflation. What I want to talk about today, we can get past his speech if we can. The market was up, S&P was up 20% this year, or at one point this summer, near 20%, I should say. And it's pulled back a little bit now the last 3 or 4 weeks. And going into the fall, what I'd like to do is give our viewers some options of where they could put their money, invest their money where it's safe, if there's such a thing in markets like this. But there's certainly places where we can put it, or they can put it, that's safer than others. I'd like you to speak to that a little bit this afternoon before we wrap this up. Where can I'm sitting on a 15% gain right now in the S&P. I don't want to lose it. Where else can I go?
Well, yeah, speaking about your gain, and not to recommend risky strategies to people, but covered calls and using some options to help lock in those gains is a viable alternative or a viable option, in this environment. But as far as stocks go, I've kind of got 3 thoughts on that. The first is to stick with market leaders, the proven leaders. 2 that spring to mind are Walmart and Salesforce. Different industries, different styles of stocks, but Walmart is the blue chip leader. In retail, its recent report proves that it is taking share from Target and from grocery stores. It's killing it online. It's got the Sam's Club angle because member clubs are also hot. It pays a dividend. So the blue chip leaders and just leaders in general. But then also value. There are some good sectors, but within those sectors, you're going to find stocks that are higher or lower valued. One that I pay particularly close attention to is the consumer staples. That's a
Mhm.
great sector for today's environment. Pays a really good high yield as a sector. Within the sector, though, you can get valuations above 30 times earnings or as low as 11 times earnings. And
Mhm.
one of the interesting things about the consumer staples sector is when you get your valuation down, your yields tend to go up. So you can look for value and yield in this sector, which brings me to the third angle of approach that I'm kind of focused on this year and just in general, and that's dividends. So
Mhm.
looking for dividends and returns. So if you can find a blue chip leader that's paying dividends and gives a value, there's a very high probability you'll be able to outperform the bond trade over the next few years with
Okay.
ease.
All right, let me play. I'm going to get this comment. We're going to get this comment, you and I, on this video. I'm pretty sure of it. I don't want dividends and I don't want safe. My risk tolerance is a little bit higher than that. Where else can I go?
For risk and for growth. I mean, that's a tricky one because I mean the environment is so mixed. Um,
How about let me throw this name out there. You know, they reported this week and made the market green for, I don't know, maybe 2 hours. And then the Nvidia,
Nvidia.
obviously, you know, that's on the tip of everybody's tongue as
Yeah,
far
right.
as growth and explosive growth,
Right.
the potential for explosive growth. For the investor that has a little more risk tolerance, a
Right.
little more time frame to work with than say guys like me. Any place out there that you would look at?
Well, I think Nvidia is a good call, especially amongst the semiconductors. Um, the price pulled back after the report, and it shows that some of the early investors were waiting to take profits.
Mhm.
But the results, the guidance, and the analyst outlook have the stock trending about 100% higher from where it is now.
Mhm.
So I think that Nvidia is a great stock to buy on pullbacks.
Any other tech names out there you're looking at?
Tech. Well, I already said Salesforce. Well, in chips, I like Ambarella. It's kind of a
Okay.
small name. It's out to the side. They're working hard on computer vision, which is going to be important for self-driving cars and in the industrial application of artificial intelligence. So that'll be a long-term play on tech.
I know I put you on the spot there, buddy. I'm sorry about
Yeah,
that,
right,
but
Don.
I know that we get comments and we get
I should have
emails
expected it.
about you know, other things besides the dividend plays and the
Right,
safer plays. We are never, both you and I are naturally going to gravitate towards those safer plays.
right.
Maybe because we're older, maybe because we're wiser, maybe a little bit of both.
Well, I
Hey,
know
look,
how it is.
I want to
All
thank
this,
you for joining me again
right.
this week. Uh, if you like this video, give us a like, give us a subscribe if it's really done something for you. Thomas puts this newsletter out for MarketBeat every week. It's a long form, almost a white paper kind of report on the market, where we anticipate the market to go. We'll leave a link down in the description below where you can get that for free, absolutely free. Check it out. I think you'll find a lot of value in it. Thomas, I appreciate you being here, man, and we'll see you the next time.
Thanks for having me.